How do you get a low interest rate on your mortgage? Well, it's not like buying a car where you can just call up and negotiate. It depends on your circumstances. There are lots of things that can affect it, but two of the main things are the size of your deposit and your credit score. If you have a 5% deposit, you might get this interest rate. If you have a 10% deposit, a slightly lower interest rate. If you have a 7% deposit, generally that'll get you the same deal as the 5% deposit, because it usually only changes in 5% thresholds, 5, 10, 15%, for example. Also your credit. If you've got perfect credit, then you might have a good chance of getting the best deal out there on the market. But if you've got missed payments, defaults, CCJs, debt management plan, there might be lenders out there who won't accept you, and you might need to go to another lender who's more flexible with credit issues but might have a slightly higher interest rate. It's not just about your deposit and credit though, it could be other things. For example, you might have lender A on the high street who's got the best deal today, but they might have a rule that you have to have been in the same job for the last 6 months. And if you've only been in your job for 3 months, then you wouldn't be approved for that mortgage. But then you might have lender B, who's got a slightly higher interest rate, but says there's no minimum time. As long as you're in a job and it's a permanent contract, you can apply for the mortgage. So it'll depend on your overall situation, which lender you end up with. And it's your mortgage broker's job to look at your overall situation and find who's going to be the cheapest lender overall for you. But some of the main things definitely are the size of deposit you have and your credit history.